Hi, everyone, and welcome to the podcast. Being successful often has to do with doing things that other people don't or won't do. Financial success is no different. Coming up, I'm excited to talk with my guest, Jaspreet Singh, host of Minority Mindset. He and his platform teach people how to think about money and the world in a way most people don't. Jaspreet, welcome to the podcast.
Jaime, thank you for having me. It's an honor to be on with you again.
Again. And last time you were here, you talked about how when you were younger, that your parents wanted you to be a doctor. I thought that was very interesting, but you found a way something that was even more, I would say, lucrative than being a doctor. And I'm so excited that you did, because now you're out there helping all of us with our money and making better choices. So Jaspreet, what do you like the best about helping people with their money? And why do you think you're so passionate about it?
Yeah, so even beyond the lucrativeness, I think the thing that I love the most is the mission and being passionate about what I do. The reason why I realized being a doctor wasn't for me was I was doing it for all the wrong reasons. I was doing it because doctors make a lot of money, and that was kind of what I was doing it for, which didn't make sense because I wanted to help people. Then as I started learning about money, investing, financial education, I kind of got into entrepreneurship. That really resonated well with me, and it was something that I enjoyed doing. Now, what do I like the most? It's seeing the impact of what we do. So what's interesting is many people know me from Minority Mindset, but what I tell people is Minority Mindset is my hobby, because my full-time job is running Briefs Media, which is the company that I run. We have financial newsletters like Market Briefs, which is free. But what I like most is seeing the results of what happens when people start to change what they learn about money. We have a picture in my office. It's a guy who was of Vietnamese descent. His parents were very disappointed in him because he was doing drugs, he was doing bad things, and he was not doing good with money. He started to watch our content, started to consume what we did, changed his life, and he bought his dad a home when his dad was diagnosed with cancer. And so his dad saw him live this new life before his dad ultimately passed away. And so he came to me, he gave us a picture and kind of told me this whole story, and it brought tears to my eyes because he was so happy that his dad got to, number one, see his son live this new life, and he was able to give his dad that home. And that's what we're doing. We're trying to help people be able to live a freer life financially, because if you understand money, you could have a lot more freedom.
I'm sure you hear those type of stories all the time. I mean, you have so much great content out there. And I think one of the biggest things for people and the hardest things people have is knowing where to start. So where does someone start? I say I'm in debt, I'm drowning over here. How do I get out? What are some of those easy steps a person can take to get their self back on track?
Yes, you have to start by getting control of your income. And so your income is the lifeblood of you being able to do anything. And so now, if we kind of laid this out step by step, what do you need to do? The very first thing is you got to save $2,000 as fast as possible. I don't care where you are. If you don't have $2,000, you need to go out and find $2,000 quickly, not spend any money until you put $2,000 aside in the savings account. This is money there to protect you against an emergency, because the reality is emergencies happen. Once you do that, the next thing you do is I want you to attack the credit card debt and the other high interest debts. And the reason is because that credit card debt is like shackles with a 200-pound weight on the back of it that is holding you back from seeing any financial success. We all know that the credit card companies, Visa, Amex, MasterCard, they are very wealthy and they are making a lot of money. And the reason why is because you keep paying them interest on things that you couldn't afford in the first place. And so if you have credit card debt, you got to stop spending money, period. I say that if you have credit card debt, you should not have a Netflix subscription because you cannot afford it. And this is where people say, well, Jaspreet, it's only $12 or $15 a month. What do you mean? And the reality is it's not the $15 a month. It's the 2 hours of time you're wasting on Netflix, because the average American is spending 2 hours a day on TV, watching TV. And so I want you to turn that time into educational time, no more Netflix. Start learning about how you can earn more money. Start learning about how you can manage your money. Start learning about how you can invest your money instead of using this time watching Netflix. And if you have credit card debt, I don't know how you can sit there and comfortably watch Netflix, because that should be giving you real anxiety, because that is the reason that you are not going to be able to become wealthy, because your credit card debt is charging you 15, 20, 24% a year. And that is the number one reason why most people won't become wealthy. Once you do that, once you got kind of I call it out of the financial danger zone. You got a couple $1,000s, you have no more credit card debt. Now it becomes a little bit easier. Now you systemize your money. Something like a 75, 15, 10 plan. This is what I teach, which is for every dollar that you earn from here on out, 75 cents is the maximum that you can spend. 15 cents is the minimum that you're investing. 10 cents is the minimum that you're saving. And now you just let the system do its thing. And, we can get deeper into where do you invest your money? How do you invest your money? But if you follow a system, now you're always investing and saving your money first. You're always making yourself rich first before you make everybody else rich.
I love that. I hear what you're saying, and I think it's great advice. But a lot of people, when they're in debt, they're depressed, right? So I think that's when they start watching TV more, because they just feel that sense of overwhelmed. And have people ever said that to you? Like, Jaspreet, all I got is my Netflix. I can't go anywhere else. What do you say to those people?
Well, have I got that before? Many, 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 many times. And I think you're 100% right that you start to now soothe yourself with Netflix or other therapies. Now, what I like to do is I speak in reality. If you are struggling, do you want to just let the problem sit there for the rest of your life, or do you want to do something about it? If you want to do something about it, it is uncomfortable. If you want to sit there and soothe yourself with it, it is uncomfortable. The nice thing about doing something about it is that uncomfortableness is transitory. It is actually temporary, and you can get out of it. I'll give you an example. Let me give you a story. One of the 5 richest people in the world, top 5, he's sometimes the number 1 richest, sometimes number 2, it just depends on the day, is Bernard Arnault. He is the owner and founder of LVMH. They are the company that invests in companies like Louis Vuitton, Dior, Fendi. How did he get so rich? Because millions of people pay him to look rich while he's the one that's actually getting rich. And so now you got to ask the question for yourself. Do you want to be the person that's getting rich, or do you want to be the person that's looking rich? And in American society, it is very easy to look rich. But if you actually want to get rich, you're going to have to make some sacrifices. That's the reality. Because most of us are not born with $1 million trust fund. And so if you're like the people that are not born with $1 million trust fund, guess what? You're going to have to make some sacrifices. And now, what are those sacrifices? That might mean Netflix. That might mean eating out. That might be not going on to that Cancun vacation this year. But if you stick with it, I guarantee you're going to see a different life in the coming years. I call it a decade of sacrifice. If you stick with it for 10 years of spending less and earning more, you're going to have a very different life at the end of it.
I think that's great advice, Jaspreet. It's that the media constantly bombards us that we need those clothes, right? They need the fancy car for validation. I think social media has really, really perpetuated that more so than it used to be, where people feel like pressure from their friends or whatever to have these status symbols and wear the clothes and to do that stuff and go broke doing that, and even going on the trips that they can't afford. And I totally sympathize and I understand that. I fell for it. I'm going to be honest myself. And that's why I even wanted you to come on, Jaspreet. I needed your motivation today to stay on the path,
But we all do. We all fall for it. I did too. When I first started making money, and I want to make sure this is clear, it's okay that you do, because everybody does. When I first started making money, think of it like a direct deposit from making money and dumping it into my car. First thing I did was I put brand new rims on my car. I put HID lights on my car. I put in a brand new sound system in my car. I put 2 12-inch subwoofers in my car. I mean, I tricked out my car, and I was buying these fancy, studded out, stupid looking watches thinking that this was making me rich, when in reality, it was somebody else that was taking my money. Now, I gave it to them. I'm not blaming them. It was my choice. I voluntarily did it, but I did not have the education that, hey, I can make myself rich with my investments.
Yeah, and I think when they have the tools like that you provide for people, it helps them. A lot of people just don't know where to go, and they don't know what to do. And that's why it's so awesome that people like you are out there helping people. I mean, unless you're born with parents who've taught you that, how do you know what to do? I mean, let's just be real. Like, how would you know where to invest that money and to do the things you just said a few minutes ago?
Yeah, you're 100% right. I mean, I grew up in a very traditional Indian house where, like we were discussing before, my parents gave me two options. Jaspreet, you could be a doctor or you could be a failure. You get to pick the option. I had zero financial education. I didn't know what investing was. I had never heard the term dividend before. I didn't know any real estate investors. The word entrepreneurship, I thought it was a French word. I never heard of these terms before. And so I had to learn this by doing. I had to make a lot of mistakes. And so if you don't have that kind of given to you, it's okay. You can learn. YouTube has made it a whole lot easier, but you got to be willing to try and screw up and understand it's going to take time. And that's the toughest part, because Instagram makes it feel like everything can happen overnight. You see all these 22-year-olds driving around in $150,000 cars saying, hey, I'll show you how to make 10 grand a month on autopilot. Just buy my program for $997. And you feel like it's so easy, when in reality, it takes hard work and it takes time and it takes sacrifice. And you just got to, number one, realize it's possible, and then adopt your mindset. You have to believe it's possible for you. Number two, you have to understand that money is just a tool. Many of us grow up believing, myself included, that money is taboo, it's evil, that rich people are bad, that they did something slimy. When in reality, money is just a tool. It amplifies who you are. If you give a good person more money, they have a tool to do more good. If you give a bad person more money, they have a tool to do more bad, which is why we need more good people with money. And it costs money to eat. It costs money to feed other people. And because of that, it is your duty to become successful. Now, we have more resources than ever before here in America, particularly, but you get to decide how you use those resources. Are you going to use the resources to look rich, which it's a free country, you can do that, or do you want to use those resources to actually become rich? It's harder to do that, but those tools are available.
On the go banking rates right now, a lot of people are struggling and they're trying to find ways to save money. So for you, where do you shop? Are you shopping at Sam's Club? Are you shopping at Costco? I know you're not at Chanel or the Louis Vuitton store. I don't even know if you're going to Whole Foods. It might be too expensive. What are some things that you suggest to people who are trying to get out of credit card debt where they should shop?
Well, I do want to premise it with this, that I'm not against buying nice things. I'm not against buying expensive things. I'm just against people buying things they can't afford. That's not within your budget. If you can afford Chanel, go ahead and buy it. My wife, she likes nice things. My wife likes expensive things. Now, does that mean I'm never going to allow her to buy it? No. I want her to have whatever she wants. You want what, I don't know, Chanel. I used to think it was called Channel. If you want the Chanel, fine. I just want to make sure we can afford it. And that's the main thing is, can you afford it? So where do you shop? How do you save money? The first thing is understanding, what can your budget afford? So if we follow something like a 75-15-10 plan, that means number one now, if you make $100, $75 is the maximum that you can spend. Ideally less. The more you invest, the wealthier you're going to become, but start with something like this. Now you divide it up, because what your interests are different than mine. I like spending money on certain things more than others. My clothes, I don't really care. I'll buy clothes from AliExpress from China because I don't really mind. My wife doesn't like that. So if my wife's buying my clothes, she'll buy it from somewhere else. But if I'm buying a hotel or a vacation, I now like staying, and I feel weird saying this, but I like staying at nicer hotels, and I like having a little bit of a nicer travel experience because I didn't know that these types of hotels existed before. And so that's where I spend my money, and I will splurge more on those things. So you can splurge wherever you want as long as it fits within your budget. And that's the most important part. So you can find where you want to cut back. I like eating healthy foods. I spend money on healthy foods and travel. My wife likes certain luxury brands and other things like that, so she splurges there. But as long as it fits within your budget, that's kind of the real key here.
So it isn't so much where you shop, it's that where you're shopping is within your budget.
Yes. Yes. And, it's the same thing with people say, oh, the reason why you're broke is because you go to Starbucks. That's the stupidest thing I've ever heard. If that gives somebody value and you can afford it, that's fine. You can't say there's a whole community on the internet that kind of shames you for spending money. The whole reason to have money is so you can have nice things. I want you to have all the nice things. I don't care if it's Chanel. I don't care if it's a BMW. I don't care if it's a Rolls Royce. I don't care if you want a private jet. Good. Earn it. Afford it. That's what I want. I want you to be able to have those things and not have to worry about the price.
Okay. So now I'm going to ask you the question everybody wants to know.
Please.
Where do I put my money so that I can be rich and I can be wealthy? Going into 2025, everybody's really stressed out, right? We're going to have a recession. What are your top 3 places people should be putting their money right now?
So I'm going to give you the simple answer, then I'm going to give you a longer answer.
Okay.
How's that sound?
Sounds good.
So there are 3 assets. You said 3 places. There are 3 assets that have built more wealth than anything else in this country over the last 100 years. That is a business, the stock market, and real estate. Now, this is very simplified because people will say, well, how do I invest in stocks? Where in stocks? What type of business? So let's go a little bit more granular and understand what does this actually mean and how do you actually build wealth? Because many times what people are looking for is, what stock should I buy? But that is the wrong question to ask, because even if I said buy this stock, it may work for me, it may not work for you because your goals are different than mine and your whole perspective of how to trade it is going to be different than me. So let me explain kind of how to go through this. The first question you want to ask is, do you want to be more of an active investor or passive investor? Now, when I say active investor, that doesn't mean a trader. I'm not talking about trading. That's gambling. That's not a game that I play. I mean holding on to an investment, whether it's a stock or a real estate investment, for years. Passive investor is somebody who's investing in something that's managed by somebody else. So this might be an ETF, an index fund, a mutual fund, or a real estate fund. This is a group of assets. So for example, there are ETFs out there. ETF stands for Exchange Traded Fund. It's just a fancy way of saying a basket of companies, a group of companies. There are ETFs out there like SPY, which gives the exposure to the S&P 500. What's that? It's a group of the 500 largest companies in the stock market. So instead of you going out and buying a little bit of each one of these 500 companies, you could buy one share of SPY on the stock market, and now you own a piece of the 500 largest companies. It's managed by a computer, the fees are low, and you don't have to worry about doing anything. You own a piece of the United States economy, and that's it. That's passive investing. Now, what is the advantage of passive investing? The advantage is, number one, you don't really have to do much work. You can just set a system where you're buying it every week, every 2 weeks, every month, and you forget it. The con is you're going to get generally lower returns than if you could find a good active investment. That doesn't mean you get bad returns. Over the last 70 years or so, since the S&P 500 was created, it has grown by a little bit more than 10% a year on average. That doesn't mean that it goes up every year, but if we take a look at the last 70 years, including the booms, including the crashes, including the recessions, the S&P 500 has grown by around 10% a year on average. So now, you decide, do you want to invest in a company like Amazon or do you want to invest in a fund? If you want to invest in a company like Amazon, you better be able to read a financial statement. And most people that are buying stocks have no idea what a financial statement is. So if you don't know how to read an income statement, a balance sheet statement, or a cash flow statement, I want you to really reconsider buying individual companies because it gets very risky, because how do you even know what you're analyzing and what you're investing in? Then the next question I want you to think about, once you know if you want to be an active investor or passive investor, is how do you want to get paid? Do you want to get paid with cash flow or do you want to get paid with appreciation? Cash flow is you buy this investment and the goal is to make money every month or every quarter, and you get paid without having to sell. Growth is I buy this thing for $100 and I'm hoping it goes up to $500 over the next few years. The advantage of growth is you don't pay taxes until you sell, but the risk is it could crash. With Cash flow investing, the advantage is you get paid today, but the negative side is you have to pay taxes on that income. So you got to find what you like. I prefer cash flow because I like the idea of getting paid regularly without having to sell, and I can stack this cash flow. So my goal is to be able to live off of the cash flow that my investments pay. This brings us to the third question, which is what do you want to actually invest in? Do you want to invest in real estate? Do you want to invest in stocks? Because now that you know if you want to be a passive investor or an active investor, if you want to invest for cash flow, if you want to invest for growth, now you can look for real estate deals or stock market deals that align with that. So for me, I prefer cash flow. The majority of my investments are for cash flow. So when you look at my real estate investments, they're all for cash flow. When you look at my stock market investments, the majority of my stock market investments are for cash flow. And then I have some investments that are more for growth. And that is the bulk of my investments. And that's how you start your analysis.
Okay, Jaspreet, you gave us all this great advice, but where do just me, the average Joe, goes to get help with this? Because it's a little overwhelming. You say to invest and do all these things, but it still can be overwhelming. Where can I get the training? Where can I get the know-how? What are some things people can do?
So there's a few things. It depends on where you are. So this is where starting with what's free, I recommend. Go to YouTube, go to podcasts, start reading. Books cost a little bit of money, but if you can find some free books, just start learning. Obviously, I have a lot of content on my channel, Minority Mindset. If you don't like my channel, that's okay. You're not going to hurt my feelings. I'd rather you become financially educated. Then when you want more on what's happening in the market trends and more education, you can check out what we're doing at Briefs Media. We have a free newsletter called Market Briefs, where every day my team is working to break down what's happening in things like the economy, the stock market, crypto, global, and our own economy into plain English. We try to take what's happening in Wall Street and make it so the average person can understand and have fun with it. So, we'll make Jerome Powell, the chairman of the Federal Reserve Bank, into a pirate. That was today's newsletter. So, we have fun with it, with what's going on. And you can go to our website, briefs.co, to sign up for that. And then just go wherever you feel natural. As you start reading books, as you start learning, some of you are going to say, I love real estate investing. I love this idea. Well, read more books on real estate investing. Maybe you buy a course in real estate investing. Maybe you try it. Start meeting people. Go to real estate investing conferences. Maybe you say, I hate real estate. I want to invest in stocks. Okay, that's fine. Some of you are going to say, I want to start a business. Okay, that's fine. Now you start looking for content in that niche. But just get started. There's so much free content out there. Start with the free content. Learn from that and then start to pay. Like, it's baby steps. It always breaks my heart when I see people getting started and they'll spend thousands of dollars they don't have on education that they can't afford. Please don't do that. Like, even for us at Briefs Media, we say on our sales pages, if you want to, we have a paid newsletter called Market Briefs Pro for stock market investors who want to keep up with financial trends. If you have credit card debt, don't buy our stuff. Go out and pay down your credit card debt first. Once you pay it off, we'll be here for you. Like, it just breaks my heart seeing people spend money they don't have on programs that they're not going to use.
So what do you think, you bringing up credit card debt and all these type of things, what do you think are the three biggest money mistakes people make when it comes with their money?
The first biggest money mistake that people make when it comes to money is they don't understand the rules of money. The second biggest mistake that people make when it comes to money is they follow the two S's. They save and spend all of their money. And then the third biggest mistake that people make when it comes to money is they don't understand risk. So if I break this down, when it comes to the rules of money, we live in what's called a capitalist society. What does that mean? It means that you can make money from your labor or your capital. Now, your labor means your work. When you go to work, your capital is your money. And what's interesting about this is in our economic system, the wealthiest people are people that make money off of their capital. But our entire education system teaches you how to make money off of your labor. So there's a disconnect here. And this is where real financial education comes in handy, because you start to learn, hey, if you want to build wealth, you got to do something different than what you learn in school. Now you might say, well, Jaspreet, you sound like a conspiracy theorist. Well, let me explain this to you. I'll break it down because I really don't want that. I'm speaking from facts. There's three things that you want to understand when it comes to money and the rules of money. Number one is that money flows to the investor. And what I mean by that is, in our economic system, we have three entities. You have consumers, investors, and businesses. Consumers is everybody. Every single person, rich, middle class, poor, everybody's a consumer because everybody needs to eat, everybody needs clothes, everybody buys a car, everybody buys things. So you as a consumer, you go to a business, you're going to go to Chipotle and you're going to buy the guac. So you go to the business. But who's making the money when you go to Chipotle? It's the investors. It's the people that own Chipotle. It's the people that invest and own those profits. And those are the investors. So consumers spend money in businesses and those money flow to investors. That's part one. Part two is that inflation benefits the investor. Inflation became popular after the pandemic when inflation was very hot. But inflation didn't start at 2020. We've been seeing inflation for decades. That's why if you ever talk to your grandparents, they'll tell you that I used to be able to go to the movies for a nickel. And What does that mean? It means that the value of the dollar has dropped. The Federal Reserve Bank says that they want 2% inflation, which might make you wonder, why 2%? Why not 1%? Actually, why not 0% inflation? Or why not negative 2% inflation? Why can't we have negative inflation? Because that would mean that our dollars, our $100, could buy more stuff. And the reason why is because the Federal Reserve Bank wants the value of the dollar to drop, causing the price of things to go up, because that helps the government. Because the government has a lot of national debt, and inflation means that the government can pay back that debt with cheaper dollars. So we know that the system wants to create inflation. But what does that mean now if we go back to the consumer, the investor, and the business owner? Inflation means you as the consumer have to spend more money. You go to Chipotle, you got to pay more money for the guac. More dollars go to the business, which ultimately means more dollars flow to the investor. So going back to number one, money flows to the investor. Number two, inflation benefits the investor. And then we have number three, which is our tax code. Now, I didn't finish my story earlier, but when I told my parents I didn't want to become a doctor, my dad gave me essentially an ultimatum. What he said was, how about you go to law school? That way you can keep some pride in the family. And I said, okay. So I went to law school. I never worked as an attorney, but I learned a lot about taxes. And what I can tell you about taxes is that our tax code gives preferential treatment to investors, not employees, not consumers. What do I mean by that? If I make $1 million from my investments, I'm going to pay lower tax rates or get higher tax breaks than if I made that same $1 million from my job. Warren Buffett made $700 million from the dividends from Coca-Cola back in 2021. The CEO of Coca-Cola made $25 million that same year, and he had to go into the Coca-Cola factory every single day. But I don't want to focus on how much money you can make. I want to focus on the tax rate because the CEO of Coca-Cola had to pay a tax rate of around 50% on the $25 million that he earned. Warren Buffett's top tax rate was 20% on the $700 million because he made that money from his ownership, from his investment in Coca-Cola, versus the CEO made that from working in Coca-Cola. What does that mean? Our economic system is designed to benefit the investor. So that's the first thing that I wanted to say, that you have to understand the rules of money. Part two is you save and spend all of your money, the two S's. Starting with savings. You need to save some money. But in the traditional Indian house, in the traditional Indian culture, you save every dollar you can. Why? So you can have a big bank account. Why? Because that's how they think you get rich. I know this from firsthand experience because every traditional Indian household wants their kid to become a doctor so he can make a six-figure salary, live off of $50,000 a year, and save $200,000 a year. That's what they want. That's what's considered wealth. But the problem with that is when you save all of your money, your savings get eaten away by inflation. And so when you understand that, you can say, well, I need to save money for an emergency. I need to save money to make a big purchase. I need to save money for an investment. But the rest of the money should be invested, not just saved. And then the other S is you spend all of your money, which is pretty self-explanatory. If you make $50,000 a year and you'll spend $70,000 a year like the majority of Americans do, you're never going to become wealthy because you're busy making everybody else rich. And the third part to this, the third biggest mistake that so many Americans make is you don't understand risk. Everybody will tell you that investing is risky. That, well, if I put my money in the market, there's a chance that it will go down. And you're 100% right. But there's also a risk to not invest your money. If you save your money, there's a risk. And that risk is your money is going to get eaten away by inflation. In fact, it's a guarantee. You know that your savings are losing value. This is something we can just look at history to see. Does investing have risks? Absolutely. Could you invest in a company that goes bankrupt? Absolutely. Are you going to lose money? 100%. But the goal is to make more money than you lose. And we know that investors, that's the game that they play. They're learning, how do I make better investments? And once you learn that, now you can invest more confidently. You can have better psychology when you invest, because when you go through a market crash, because they will happen, it will happen again. We know market crashes happen. Instead of being the person that loses, you can be the person that comes in and buys the good opportunities at a discounted price.
Okay, then. You brought up inflation and stuff, right? How do I beat inflation no matter what salary or how much I make? I mean, I can see right now the rich person, right? I can take some money out of the savings, I can put it in the stock. What about the living paycheck to paycheck person, but they don't have any credit card debt? They don't have that much. I mean, what are you saying for those guys?
Well, let's understand what that means. So if I am living paycheck to paycheck, how do I beat inflation? Well, the first thing is you got to have money to put aside to beat inflation, because we know that unfortunately, the average salary has not beat inflation. Over the last 5 years, between 2019 and 2024, the average salary did not beat inflation. Reported inflation is around 24-25% between 2019 to 2024. The median income has risen by less than that. I believe it's something around 15 to 18%. And again, it varies industry to industry, which means that the median average person did not see the incomes rise fast enough, which means for the average person, you're spending more money on your rent, more money on groceries, more money on everything, and have less money to save and invest, which means building wealth is more difficult today than before. That's a fact. Now, how do you get out of that? Well, the first thing is you got to understand how to beat inflation. Well, if you want to beat inflation with your salary, maybe you get a career change, maybe you get a job change, maybe you get a second job, whatever you got to do, you got to make some more money, because you can't just keep living paycheck to paycheck and expect to be able to magically be able to beat inflation. So you got to find a way to get some more cash, whether that's at your job, a new job, another job, or starting a business, whatever it might be. And it's hard. I know I'm simplifying it, but I'm just trying to show you what the options are. Once you do that, now you have some extra cash. Now you got to put this money to work. And we know that in general, inflation benefits investors. So if we take a look at 2019 to 2024, the median reported inflation, 25%. The median wage growth, let's just call it 20%. Housing prices over those years have grown by 50%. The S&P 500, the stock market, has grown by about 80%. So asset prices, not only did they beat income growth, they beat inflation. So if you want to now benefit when inflation happens, look at where the money goes. And we see that asset prices generally benefit when inflation happens. Does that mean the stock prices always go up? No. Does that mean the houses prices always go up? No. But over the long term, we have seen this happen historically when you invest for a long enough period of time. So you got to put your money back into the investments.
So Jaspreet, with so many people just living paycheck to paycheck, not having money to go out there and invest, what advice do you give them?
Well, if you're living paycheck to paycheck, the reality is you're going to have to make a change. Now, if we take a look at the numbers, what you'll see is that inflation has been outpacing wage growth. Between 2019 to 2024, reported inflation has been around 25%. Wage growth has been somewhere around 20%, which means for the average person, your incomes have risen over the last 5 years, just not enough to keep up with inflation, which means more of your money is going for your rent, or your mortgage, more of your money is going for your groceries, more of your money is going on your vacations and whatever it might be. So you have less money to save and invest. So if you want to be able to beat inflation from an income perspective, you might have to get a career change, get a job change, add a new job, or add on a business, create a business, add your own income stream. But if you want to now beat it from your investments, it's a very different game now, because if we take a look at the last 5 years, between 2019 to 2024, incomes have risen by around 20%, inflation around 25%, housing prices have risen by around 50%, the S&P 500 has risen by around 80%, which means the money has flown to investments. So if you want to benefit from inflation, you need to be investing your money. Does this mean investments only go up? No, absolutely not. But if you hold on to investments, if they're good investments for long enough, history has proven that they generally go up. So if you want to invest your money, that means you're going to have to make a sacrifice. And that's very hard when you're living paycheck to paycheck. And that means either you're going to have to earn some more money or you're going to have to cut back on expenses or both, that we have money to invest, because we know that inflation generally benefits asset prices.
So do you think a person should do real estate first or invest in the stock market? If you're just a beginner.
I started off in real estate because I started off investing in 2011 when real estate prices were rock bottom. It made sense for me. Today, it's not the same. It might be, well, it is 100% easier to start investing in the stock market because you can start with less money and it's easier to access. But some of you are going to say, I want to do real estate. So it just depends on you. The stock market is more accessible. It is easier to get started. You can start with less money. The real estate market, you're going to have to put in more work. You're going to need more money to get started, and it's going to be a bigger headache. But they both work. You just got to find what's working for you.
So either's fine. Just find what works for you. And probably make sure if you do real estate, you get a. Is there any tips that you have? Said you did real estate. So you have any tips when it comes to your first property? What to look for?
Hire smart people. Always get a property inspection. I made a video on YouTube. It's called my worst real estate deal ever. I was 21 or 22 years old at the time. It was my third deal. I bought the property without a property inspection because my contractor said that it's going to be a great deal. And then I later realized he said that just because he wanted me to write him a check to do the work because he ran away with the money. And then I found out that this property was a ticking time bomb and it was a horrible deal. So never buy a property without a property inspection. Work with licensed and insured contractors. It's going to cost you more money. Get a good attorney because they're going to help you speak with the city. Get a good tax accountant who specializes in real estate because they'll help you save money on taxes and come up with creative things that you can do with that. And get a property manager because you want it to be passive for you. You want to be in the business of investing in real estate, not in the business of managing your real estate. So when something happens and the toilet needs to be unclogged at 3 a.m, it's not your duty to wake up and do that. It's somebody else's.
That's really good advice. Really good advice. So one of the last questions I ask people is, what does living a richer life mean to you?
So I'm going to go a little hypothetical here, a little theoretical, I should say, because when I say we talk about in our office here, that our goal is to live a rich life, not just have a big bank account. And what that means is I want to be rich in 4 areas. I actually say I want to be fit in 4 areas. It's my quadrifit theory. I want to be physically fit, mentally fit, spiritually fit, and financially fit. Physically fit meaning healthy. Mentally fit meaning happy. Spiritually fit meaning having a purpose. And financially fit, having the money to do what I want. It's that freedom. Money buys you freedom. It buys you options. And that's really what a truly rich life means. Now, people get into all the woo-woo stuff and they say, oh, money doesn't matter because, you just got to be happy. No, that's not what I'm saying. Money matters. It costs money to eat. But if you really want to live a rich life, you got to understand money is just one aspect of your life. And that's not the thing that's going to make you happy. It's not the thing that's going to make you fit. It's not the thing that's going to give you a purpose. But it can save the financial stress from your life. And if you really want to live rich, you got to work on all aspects of your life.
I 100% agree with you on that. There's more than just the fluff. If you don't have money, you have stress, and you can't really do those or enjoy those things you just spoke of in order to have a richer life. I'm so glad that you came here today, Jaspreet, and you shared your knowledge. A lot of us, hey, we're struggling and we're constantly tempted to go out and buy things we can't afford, or we feel like we can't get out of the debt, or we can't change our lives. And your videos inspire us. You get us fired up. Tell me, where can people, I want to make sure everybody knows, follow you, get your briefs, get your newsletters. Tell me what they can do and where they should go.
Yeah, well, thank you again for having me on. It was really a pleasure. You can watch my content on YouTube. at Minority Mindset. If you want to get more on the financial news and education side of things, you can check out what we're doing at Briefs Media at briefs.co. We have a free newsletter called Market Briefs. You can Google Market Briefs. You can see it on the website, or you can just go to briefs.co/market, and you'll see Market Briefs right there.
Everybody go follow Minority Mindset and get... Hey, I actually signed up for the newsletter. I believe in it, and that's why I called Jaspreet to come back on. I think it's just super helpful. So everybody go out and sign up for it. And I want to remind all of you to go out there and live richer.